Hi guys, welcome to TipRanks. My name is Annika and I love to hear what you guys think of different stocks and your thoughts on the stocks I talk about. So please leave your thoughts in the comments below. Today we're looking at two really cool stocks because these are two penny stocks that analysts think could surge up to 400%. There has been such a rapid rise in the prices in the stock market, and these rising stocks are offering investors the best returns, especially in this low interest environment. If investors are careful, then they can choose stocks that could beat the rising rate of inflation as well. For many investors looking at the best returns, penny stocks tend to give them this opportunity as they tend to have very high upside potential. However, there's a caveat. When it comes to penny stocks, there tends to be a lot more risk involved. This is because they tend to be earlier in their stages of business development. And that means that for those returns, there can be huge downswings in the price as well. It's really important for investors to manage their risk effectively, especially when it comes to penny stocks. Top investment bank Wells Fargo has recommended these two particular penny stocks that I will be talking about in this video. The first stock is IMV Inc. and its ticker is IMV. IMV is a microcap clinical stage biopharmaceutical company, and they develop a new class of immunotherapy treatments for cancer. The company's research is based on its proprietary DPX delivery platform, and this is a unique technology that offers a no-release delivery system. The company's DPX system can be formulated to induce a robust immune response through the use of peptide antigens. IMV's program holds the promise of new therapies for hard-to-treat cancers such as recurrent ovarian cancer and diffuse large B-cell lymphoma, DLBCL. IMV has 3 important ongoing phase 3 clinical trials of its flagship vaccine candidate, maveropepimut S. Data from the earlier phase 1/1b trials showed best-in-class results. In the current phase 2 trials, maveropepimut S was tested as a treatment for advanced recurrent ovarian cancer. Translational data from the 22-patient ovarian cancer study showed that maveropepimut S had a clinically significant positive effect, with greater than 10% on-treatment tumor regression and long-lasting clinical effects. The company will be submitting the phase 2 clinical study protocol for this trial for FDA review by the end of the year. In the second study, as a treatment for DLBCL, maveropepimut S is being evaluated through randomized phase 2b clinical trial, with recruitment in multiple sites in North America. DLBCL study is in combination with Merck's anti-cancer drug Keytruda. Like ovarian cancer study, this trial has shown significant benefits from treatment with long-term tumor regression. The clinical update on this clinical trial is scheduled for mid-2022. The third phase 2 clinical trial of maveropepimut S is in combination with Merck's Keytruda and is a basket trial against several cancers, including bladder cancer, liver cancer, and MSI-H tumors. The trial was begun back in 2018, and the clinical update is expected by the end of the year. For third quarter results of 2021, the company had cash and cash equivalents of $36.5 million and working capital of $37.3 million, compared with $36.3 million and $35.6 million respectively as of December 31st, 2020. This increase primarily reflects the net proceeds from the $25 million public offering completed on July 20th, 2021, and this was also offset by cash used in operations year to date. R&D expenses had increased to $5.6 million for the 3 months ended September 30th, 2021, compared with $4.9 million for the 3 months ended September 30th. This increase of $0.7 million was mainly due to startup costs for the Phase 2b Vitalize study, an increase in manufacturing and development costs for MVPS, and an increase in headcount. These increases were partially offset by a decrease in development costs for DPX COVID-19 following a shift in strategic focus. The company reported a net loss and comprehensive loss of $10.4 million for the 3 months ended September 30th, 2021, and this was $5 million higher than the net loss and comprehensive loss of $5.4 million for the 3 months ended September 30th, 2021. The current price for IMV stock is $1.74, but the analyst rating consensus is that it's a strong buy, and the analyst price target on IMV is $8.04, which is a 362% upside. Wells Fargo analyst Nick Abbott believes the company's share price could reflect the ideal entry point given everything the company has going for it. He deems it to be a buy with a $14 price target, which is actually a 713.95% upside. He says that we believe that IMV has a potential best-in-class vaccine platform with upside potential as it broadens cancer vaccine maveropepimut S beyond diffuse large B-cell lymphoma and beyond survivin as a target, with additional optionality in infectious disease. He also said that we would be buyers of IMV following encouraging statements made on forthcoming bladder and MSI high cohort basket trial data for maveropepimut S plus Keytruda, which the company characterized as a very exciting and intriguing respectively. The second penny stock is Applied Genetic Technologies, and its ticker is AGTC. Florida-based Applied Genetic Technologies has a very interesting niche in the biotech world. They focus on rare, inherited ophthalmic conditions. That is, genetic diseases of the eyes that can cause blindness. The company is a clinical stage biotech researcher that uses proprietary gene therapy platform to develop new therapies for patients with these rare, blinding conditions. Applied Genetics has programs underway for the treatment of X-linked retinitis pigmentosa, XLRP, and achromatopsia, ACHM, CNGB3, and ACHM, CNGA3. X-linked retinitis pigmentosa is a X-linked form of a degenerative eye disease that manifests in early childhood. XLRP is inherited through the maternal line and appears in male offspring. It causes a gradual loss of vision in boys and young men, starting with the loss of night vision and continuing through a gradual narrowing of the peripheral vision. Applied Genetics currently has a drug candidate, AGTC 501, in 2 clinical trials, the Phase 2 Skyline trials and the Phase 2 and 3 Vista trial. These trials are based on positive data released earlier this year from the highest dose groups in Phase 1 to 2 study. Skyline and Vista have several upcoming catalysts, mainly interim result releases scheduled throughout 2022, and the company expects that the trials justify a biologics license application to the FDA. Applied Genetics' other ongoing pipeline program is aimed at developing treatment for achromatopsia. This condition is characterized by poor visual acuity to the point of legal blindness, along with loss of color discrimination and extreme sensitivity to light. It is caused by mutation in one of several genes, with the most common causal mutations being in CNGB3 or CNGA3. Applied Genetics is currently conducting an early Phase 1 to 2 studies of various AAV gene therapy products to test efficacy against both CNBG3 and CNGA3 forms of achromatopsia. Milestones expected over the next 12 months include a release of 3-month data on pediatric patients by year-end 2021 and a submission of the end of Phase 2 briefing to the FDA with feedback anticipated in the first half of 2022. The current price for AGTC is $2.78, and the analyst rating consensus is that it's a strong buy. Analyst price target is $13.40, which is a 382.01% upside. Wells Fargo analyst Yanan Zhu covers this stock, and she wrote that clinical programs in XLRP and ACHM remain on track, with 3-month data from the Skyline study in XLRP expected in the first half of 2022, exact timing to be announced upon completion of dosing. We expect the study to recapitulate the 50% response rate seen in the earlier phase of 1 to 2 study, and set the program on a path to approval as pivotal data from the Phase 2 to 3 Vista study begin to reach out in Q4 of 2022. Yanan Zhu believes that it is undervalued relative to the opportunity in its XLRP AAV gene therapy. She also says that they provide a best-in-class profile, better safety profile than peers, and evidence of improvement in macular structure. She then gives it a price target of $12, which is a buy and a 334.78% upside. So for the first stock of IMV, the smart score is a 4 in that it is fairly neutral when it comes to outperforming the market. It is more skewed towards underperforming the market. But despite this, analyst ratings deem it to be a strong buy. TipRanks investors are very positive. Blogger opinions are bullish. Technicals, however, are negative, but insider activity says that many have bought shares. Return on equity has been negative, however. Applied Genetic Technologies has a smart score of 7 in that it is neutral but is more skewed towards outperforming the market. The analyst ratings are a strong buy, TipRanks investors are very positive, and the news sentiment is bullish. However, hedge fund activity has decreased, technicals are also negative, but insider activity have bought shares. However, the fundamentals show that return on equity is also negative. Biostocks that are in clinical trial stages tend to have delayed gratification when it comes to share prices. This is because a lot of the share price increases is linked to the success of the company's trials going well. So, what do you guys think of these two penny stocks? Are you guys looking at biostocks? If you have any biostocks you're looking at, leave your thoughts in the comments below and what you think of these particular stocks. We love to hear from you. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you know when the TipRanks channel releases a video. Remember, when it comes to penny stocks, they tend to have more risk involved. But then in economics, the concept is risk to reward. Sometimes the higher the risk you take, the higher the reward. But this can also mean there is potentially a higher downside, hence the higher risk. So just bear that in mind. Also remember, this is not financial advice. I'll see you guys in the next video. Bye!